March 14th, 2024. Whenever you get a big spike on the opening range like this, you always need to be looking out for the measured move. We didn't end up getting it today, but a lot of days you get a spike, you get a measured move down. You get a spike, you end up getting a measured move down. And a lot of times it ends up, heading basically directly to the low or the high of the day, depending obviously on the direction. And then there was today, this is today, but where we ended up getting basically a leg one, leg two measured move instead. I think this is more unusual. Usually, what ends up happening is you get you didn't quite touch it, but usually you get a measured move of the whole spike after a pullback. You can see we did get a pullback, but the bull channel was relatively tight. So bar one, a bear bar, but a big tail on the bottom. Probably sellers above, probably buyers not too far below. You can see there were sellers above during bar two, so a bad high one for the bulls. Bar three, an inside bar. It's double top for the bears with bar one, but overall, I would just rather be flat right now, waiting. And then a big bear surprise on bar four. Huge breakout closing below, the past probably 75 to 100 bars. So probably going at least a little bit lower. And then you end up getting follow through for the bears on five. Five is not as big as four. Traders wanted five to be as big as four. Generally, if you're getting a breakout that big, for it to be extremely successful quickly, you're going to need big follow through, and it's just not huge follow through on five, but still follow through for the bears, and decent sized bear bar, but it's about half the size of bar four, so that's a bit of a problem. And momentum really starts to stall on bar six when you get a big tail on the top. So what do you expect, right? Well, if you're down here, if you're short down here, it's really dangerous because we're probably going to get a pullback to at least 50%. You can see we got to pull back to very close to 50%. Generally, when you get a spike this big, the market tries to test the 50% pullback and then some sort of second entry short. So a reversal up on seven. Do you buy above seven? No, I think this is too strong to be looking to buy, but I think bears will exit shorts above seven. So traders exit. That starts to cause the rally on eight. Anyone who held through seven, betting that it was a minor reversal, probably still is a minor reversal, but they're disappointed in eight, and we get a surprisingly good bull bar on nine. Nine is, it's three straight bull bars, and it's probably always in long on the close of nine. But the problem is you're going to get a deep pullback at some point. You know that 3 through 6 was strong enough for a second leg, so we're going to get a second big leg down at some point. However, 11, it's not really a great sell because 7, 8, and 9 are pretty strong, and it's a surprise, and it's enough for its own second leg. So if you sold below 10 and you get 11 as follow through, are you happy with that? No, you're probably not. You sold below 10 and you're basically at your exact entry price on the close of 11. So really not all that great. And traders are going to start to exit here. And that's what's causing the rally on 12. 12, trades above 11. So triggers the high one for the bulls essentially, but it's really not that strong. I think we're probably going to end up being a lot more sideways here. Good follow through for the bulls on 12. The thing to notice is this channel up to the 50% pullback is very tight. So the downside might be kind of limited. We might have to go more sideways to down rather than straight down, which is exactly what happened. So while 14 is a low two and probably a reasonable sell, the problem is this was a really tight bull channel, and it's hard to want to sell up here after this tight of a channel because any reversal down is probably minor. Good follow through for the bears on 15, but it's pretty unlikely that we're just going to collapse. It's okay to be short. I think we're back to always in short on the close of 15. Bulls are going to exit below 14, so you can make an argument for always in short there. But I think 15, we're back to always in short. And then you get a big doji bar on 16. An inside bar 17 closing near its low. It's kind of the same as selling 15. You just have these dojis just follow through. I still think, best case for the bears, we start to get a weak channel down. It would have to be steeper than we ended up getting for them to stay in. But you can see we ended up getting disappointment on 18. And so traders are just going to exit above 18, and that causes the bounce on 19. 19 is a big enough bar that we'll probably get a second leg sideways to up, which we did get on 21. You can see the 13 close was what we were trying to test. Traders who bought 13 close very disappointed in this, and they were trying to use the rally to get out. And that's what caused all the selling on 19. 20, I think any bulls who were buying, hoping to front run this, are disappointed in how 19 closed, so they're just going to exit, and that causes 20. 21, second leg up from 18 and 19, but really not all that great. And then 22 closes near its low. I think that's a credible sell. It's, it's technically, I guess, a low one short, but I kind of look at it as a low two since it's two legs up, 18, 19, and 21. But I think the important thing to keep in mind is that, 3, 4, 5, and 6 is really strong, mainly obviously 4 and 5, strong enough to get some sort of second leg down. I'm just curious about something. If you take just the surprise, Did we end up getting to that measure move? Probably not. Just the surprise. Interesting. Because technically 3 is not surprising and 6 isn't surprising, but 4 and 5 were the surprise. So sometimes it changes. But anyways, you know that this is strong enough for a second leg down. So, I think it makes a lot more sense to be looking for bear bars to sell below for the second leg rather than looking for bull bars to buy above. So you can take the sell below 22. It's a truncated wedge or head and shoulders top, however you want to look at it. 10, 14, 20, 22, truncated wedge, head and shoulders top. And so a good sell below 22 for a swing. You get good follow through on 23, but tail on the bottom. It's not bad though. It's still good, and it's still reasonable to think we're going to start to channel down. But then you get a disappointing reversal bar on 24. You can see we failed to break out below essentially the neckline of the double top. So we ended up getting more buyers there, and then you get 24. And notice anyone who's shorted below 23, disappointed 24, has a chance to get out down here, and they start to exit, and that causes the bounce up on 25. I think bears are out above 24, but you don't really want to buy. It's potentially a higher low major trend reversal, but bears have been selling the moving average all day today. So it's kind of difficult to want to buy up here when bears have been selling the moving average. Bull bar 26, but not really all that good. Just trying to test the high of the most recent sell climax, which is 22 and 23. And an inside bar 27, an inside bar 28. Do you sell 28? Probably have to have a wide stop if you take the sell on 28. It's an II, so potentially some sort of final flag, but really the market's just in breakout mode and you can wait for the breakout. I think, we've been selling the moving average all day and it's a breakout mode pattern. So it might not be the most unreasonable thing, but it's just that 28's a doji bar. It's better not to trade doji bars. Bull bar 29, but not all that great. You can see big tail on the top, and bulls get some follow through on 30, but it's really important that 30 was not able to close above the 27 high. You can see it was not able to close above the breakout point. And because of that, there ends up being more, that decreases the probability of a strong bull breakout. And because of that, you end up getting a bear bar closing near low 31. It's a low too short second entry, really good sell below 31 as well. And it's near the moving average, and bears have been selling the moving average all day, so they'll probably do it again. And you can see on 32, we get big follow through, but it ends up just being a vacuum test of the 6 close. And we start to find buyers 33 and 34. But it's mostly just bears taking profits rather than actual buyers. It's not an II 33, 34, but it's probably going to act like one, II after a sell climax. Additionally, 18, 24, 33, maybe some kind of wedge here. So probably if you're short, best to get out above 33 if we start to trade up there, because realistically, if we're going to go down, we probably shouldn't even trade up here. We should just start to go down. And so traders buy back shorts, and that's what causes 35 to get so big. We might have to test the close of 30. You don't want to buy above 35. I think you're buying, bears have sold every close above the moving average so far today. So I don't think it makes a lot of sense to be looking to buy there. Most likely, it's going to just be sideways here. Bad follow through 36, but not a great sell. The low one betting on a bull trap. Follow through 37 is not that good. We might get a second leg up from 35. We probably will, but again, this is more sideways. And I'm still, we've gotten lower highs and lower lows all day today is the important thing. You can see lower high, lower high, lower high, lower high, and lower low, lower low, lower low. So it's better not to be looking to buy, and it's better to be looking to sell in this range in general. Bear bar closing near its low 39. It's probably okay for always in bears to get back to short below 39. Follow through on 40, but not ideal. A pullback 41, and then 42 closing near its low. So some bears wait to short to sell lower. They're selling low in this range. But, just get out above the bull bar if you get it. Follow through 43, but it's really not that ideal. You wanted a better bar, but it's still okay to be short. And then disappointment 44. Bears will exit above 44, but that's why it doesn't trigger. A lot of bears sell the close of 44, trying not to let it trigger, and that causes 45. Then you basically get a dump on 46, and break up below the bear channel, below the 18 bar range, etc. So pretty reasonable. Pretty reasonable to take profits down here, I would imagine. Bounce on 47 because, this is such a climactic bar that a lot of traders are just going to take profits here rather than hold and hope we get a big swing. And, some bears who are short end up exiting above 47, 48 closes near its low. It's kind of tough. It's a tight trading range, 46, 47, 48. So it's hard to sell 48 because you're selling so low in a tight trading range at a day where it's really just not all that good to be doing stuff like that. It's never really that great, but you're selling low after a climax. So sell climax 46, 60% chance it's the end of the trend, 60% chance you get one more leg sideways to down. And we got the pullback 47. 48 might be that other leg sideways down. Reversal up 49. I think 49 is a good buy. You're towards the bottom here, and you get a failed breakout of the 18 bar range. You can see it's a failed breakout and reversal up. So we're probably not going to test all the way up here. I thought this channel was really tight, so this would probably be a minor reversal. But we could easily test all the way back up to the base of the wedge somewhere up here, where the bulls who bought this close have scaled in, and they should have another chance to get out. So I thought we might end up testing somewhere up here. It would probably at least test up to here, the 45 high, which is the most recent sell climax. Follow through for the bulls on 50 and 51. Tail on 50, obviously tails on 51 as well, but still reasonably long. Big tail on 52. It's kind of hard to be long here because you are closing in on the moving average, and bears have been selling the moving average all day. But this is kind of the first time the bulls have gotten 4 straight bull closes, so we might end up getting a rally. I still was, I wasn't super bullish at this time. I thought we would probably get a minor reversal, but we'd been getting lower highs all day. So just kind of difficult. And then a surprise on 53, but kind of climactic. Follow through on 54 is okay. More follow through 55, but a big tail on an inside bar 56. An inside bar is a final flag. So probably not going to go that much higher, especially considering the context of where we are. We're towards the top of the trading range. And then you get a failed breakout above the final flag 57. Disappointment 58. Any bulls who are long exiting, causing 59. You can see you buy the close 57, scale in 58, and then exit 59. Traders probably getting out below 59. Some try to buy the close 60. You can get a bull by closing near its high to start the channel. So spike, pullback channel, but not all that ideal. I think the bulls had chances to go up earlier and they didn't take them. 61, a doji bar. So just a tight trading range right now. Bulls want a pullback and a second leg up, and bears want to start some sort of endless pullback. 62 could be 2 legs down, and then an outside up bar 63. But, not closing on its high. And, maybe a second leg trap, but probably sellers if we get up here. Big bar, big risk, so not as many buyers above 64. And then bears exit. Surprise bar 65. It could be 3 legs down, 1, pullback, 2, pullback, 3. But 65 is strong enough that it might reset the market cycle. So when you get follow through on 66, bears will start to sell, thinking that we might get a sell to close finish towards that measured move of 3 to 6 down. I thought that was a credible measured move. I was kind of surprised we didn't reach it. Usually when you get that, there's a specific type of pattern that'll happen a lot where, not a lot, it's rare, but when you get this kind of thing, you'll get a pullback when it'll usually look like this, and then it'll just channel down for most of the rest of the day and hit that measured move. I thought that's what we were going to try and do down here. It was pretty far, but I thought it was within reach. So follow through 67 and big follow through 68. It's climactic, and the big problem is it's a wedge 7, 48, and 68, 69. So we were down here, and it's okay to be short, but kind of problematic because of the wedge. Follow through 69, but not all that great. And we try to find buyers on 70, but there ends up being a big tail on the top. If you're a bear and you're short down here, I would have a stop maybe 2 points above the 69 high. So I don't know. What's 2 points? Maybe 3 points. 2 would be here. That might be a little too tight. Maybe 3 points. I'm not sure. It's kind of difficult because you want to be quick to get out in situations like this. 70 or 71 closing near its low, so you can sell again below 71. It is a tight trading range though. Bad follow through 72. So 69 through 72, tight trading range, and we're trying to get a breakout below the tight trading range 73 for the bears, but it ends up failing, and we get outside up 74. And then instead of the sell to close finish, we end up getting the opposite and a buy the close finish. For stop orders today, you probably could have sold 4, but hard to do, or 5, but you have to get out above 7. I probably wouldn't buy either of these. You could probably sell 14 or 15. You could sell 22. You could sell 31. You could probably sell 39, 42. You can buy above 49. You could probably buy above, either of these or buy these closes. But wherever you're long, you got, this is all buy the close, I suppose. But you got to get out to start somewhere in here. If each weight tags below a bear bar and you don't, keep your stop here, and you see that and you don't end up keeping it there, then you're going to exit all the way down here, and that's too low. So probably makes sense to just get out a point or two below this. And then sell the close 65, 66, 67, 68, etc. But problem, hard to sell down here. You got to be very quick to get out. On the daily chart, this is very climactic. It's the weekly chart. Sorry. Not a great entry bar for the bears who sold below here. So disappointment. Probably sellers not too far above if we get above, and probably buyers not too far below. So tomorrow, Friday, I would just expect a trading range day. It is the last day of the week tomorrow. So looking at the weekly chart, where do bulls want to close above the week's midpoint, and bears want to close below the midpoint. And the midpoint is right here. So, roughly 5,200. So 5,200 is going to be an important magnet for tomorrow. And